In this video, I'm going to be showing you how we made $50,000 in our first month of starting our crypto fund. I'm going to show you how we started our crypto fund, how we collected $50,000 in revenues and fees combined, and how you can do it as well with your own crypto fund. And if you don't have a crypto fund already, I'm going to show you how you can do this and why you can do this, or anybody can do this as long as they put in the time and a little bit of work. Now, if you don't know who I am, my name is Ken. I am the founder of Celestial Ventures, a crypto fund, and we've raised over 7 figures this crypto bear market. And I've personally raised over 8 figures for crypto startups and advised crypto projects that are worth over 9 figures right now. And I'm also the founder of Crypto Fund Launch, this channel in which we teach crypto users how to start their own crypto fund or get more investors or deals in their crypto fund. Now, over the past few months, we've helped crypto users earn between $10,000 to $30,000 per month from just starting their crypto fund. And some of those people didn't even know what a fund was prior to helping them. And so that's why anybody could do this business model. So with that said, here's how we made $50,000 in our first month of starting our fund. And I'm really gonna break this down into 7 steps. Step 1 is you want to constantly DM people, tell them about your fund. When we started this fund, it was me and my co-founder. We DM'd people who we knew in the space, who we knew that had money and who are constantly looking for investments. And as a fund owner, that is your job, is to look for people who have this extra cash, who are looking for early stage startups, because that's essentially who you're providing this service for. And in this case, we already built a solid network in the space. We had our own personal brands, and we just reached out to a bunch of people who we knew already that were interested in investing with us. And so once we built up that list, we then moved on to number 2, which was we started sneaking in on announcements and really posting it on our social media channels, on our personal Twitter and our brand accounts. And the announcement was just as simple as saying that, hey, we are starting a fund, we are starting this private group, we are taking this many people on, and this is who we're looking for, this is not who we're looking for. We were just very specific on who we wanted to work with versus who we didn't want to work with. And it's super important when you're starting a fund, because some people are going to want to invest in you in the beginning, and some of those people are going to be new investors that don't really have money, that don't really know how to invest. And generally, we tend to draw those people out. We tend to avoid working with those people because we want to work with people who have experience in the space and who know the risk when it comes to investing in early stage crypto startups. And so we were very specific with our announcements. And if you don't have a personal brand already, don't worry, because it's super simple to start out. And the easiest way to start a brand in crypto is basically just post things that you know. Post your opinion, post your your vision of crypto, and it's really just being yourself, and it's really not that difficult. The only thing that's difficult about a personal brand is the consistency of posts. And being around crypto since 2017, I've been very consistent with my investments and trades, and that pretty much carried over to my personal brand, because I would just document what I was doing. I would just share which projects were my favorite, which projects I didn't like. And of course, some people will hate you, some people will love you. That's just the nature of personal brand. And so with DMing people who we already knew, as well as posting announcements about our new fund, we pretty much built up a list of people that were interested in investing with us. However, we knew that a majority of people were not going to be qualified. So what we did was we actually started posting about a Google form signup. And in the Google form signup, there's a list of questionnaires for those people in the list to go through in order to be qualified into our private group or our fund. And from there, we pretty much weeded out the people who we wanted and were qualified, and then weeded out the people that were not qualified at all, which actually made our job a lot easier. When we look for investors, we look for quality over quantity. And for other funds, they look for quantity, and it means just like they're just looking for the most people as possible. However, for us, we were looking for a small group of people that have excess cash, because I believe that in any market, there's about 20% of the people that spend 80% of the dollar. And so those are who we are targeting. And after the Google Form signups, we actually launched a sequence, and I think it was a 14-day launch. And with that 14-day launch, we basically just counted down and posted 14 days left, 13 days left before we launch our fund. And actually, I think in the middle of that, we wanted to make sure that we had the right people in place. And so we had so many Google Form signups. I think we had about 500 plus, we actually launched a second Google Form signup. And in the second Google Form signup, we basically just made it more detailed and more questions to basically weed people out even more, which was very interesting because now in the second form, we knew exactly who was extremely serious to invest with us and who was willing to take the risk when it comes to investing with us. Because when it comes to investing in crypto, it's just risky in general. But when it comes to investing in early stage crypto startups, it's just even more risky. And many investors that invest in early stage startups know the risk of that, and that's why we were very hyper targeted with who we work with. And so with the Google Form signups, with the second one, we basically told them that before you get in our fund, you have to pay an entry fee, and we set our entry fee pretty high, especially that it was the bear market, and it was around $3,000 for a one-time fee, or $397 per month for every single month, unless you want out. And so we didn't know it was gonna work. However, we just kind of went through with it and see, okay, how serious are these people actually? And during the launch sequence, which 14 days, 13 days, 12 days, 10 days, I actually created a video, a pitch video, in which I would send it to these people that filled out the second form. Because during that launch sequence, once I was done with the video, I would send it out to the people who were qualified based on the first and second Google form. And essentially, those that filled out the second Google form and who were accepted, we sent those videos out. And within a span of a week, we collected around $30,000 in revenue in the entrance, right? Some people paid the $3,000 one time, and some people paid the $397 per month. And that was essentially the first week of launching our fund. And after that first week, we actually started a few raises on projects, which we then raised around between $150K to $200,000 in that first 30 to 60 days. And so if you don't know how crypto funds work, you essentially take a fee out of what those people invested in. In this case, we took a fee between 10 to 12%. And I know for some of you that don't know what a fund is or haven't heard of a fund, that seems very high. However, most crypto venture capital funds, or just venture capital funds in general, they take a 20% fee, which a 10% to 12% fee for us actually isn't that much. And so in the first month, if you do the math, we raised about $150,000 to $200,000, and a 10 to 12% fee is around $20,000. And add that up in the front end fee, which that was our entrance fee, the $30,000. We collected around $50,000 in revenue in our first month. And that was around mid-August of 2022. Since then, we have collected over $200,000 in revenue in just 7 months of starting this fund. And we don't even work with many investors. I believe we work with around 50 investors, which is amazing because we've raised well over 7 figures this bear market. And I think that it's because we focus more on the quality of our investors rather than the quantity. And we also focus more on the quality of the projects rather than the quantity. Because I've seen over the years that some of these funds, they will just acquire as many investors as possible and disregard the fact that some of these investors are new, because we don't want to work with new investors. We want to work with investors who have been in the space for quite some time, because those investors know the risk, they have excess cash, and they know which projects have potential. They sort of have a feel for it. And so what most of these funds do, which is actually the problem of other funds, is the fact that they will just take on any project that they see, which means that they will just present as many projects as they can to their investors without even doing due diligence, which is a bad sign, because all they're looking for is quick money. And yes, a crypto fund can make you quick money. However, in the long run, if you just present your investors with bad projects, you're not gonna last long, and there's gonna be bad stuff that's gonna happen, which is your investors are gonna be pissed, you're gonna make a bad name for yourself, etc., etc. And so with our fund, we focus more on quality rather than quantity. Now, however, there are some funds that focus on quantity and then later focus on quality. That's great. And it really depends which one you go with first. And also what I've seen is that most funds will actually focus on quantity, meaning that they would make their funds free for people to get into. And then later on, just grab the revenue on the back end, which is the amount of money raised. But I personally wouldn't go that route, because right now we're doing very well, even though we don't have many investors compared to other funds who have thousands of investors and they're raising just as much as we are. And so if you have a fund right now, try it out. Try making it so that anybody in your fund that invests with you, pays a small monthly fee or a one-time fee, or at the very least, if they want to get in for free, make sure that those investors can contribute to their fund. Whether it's a referral, whether it's a promotion of your fund, because you want to make it a win-win. Because I believe if people are really serious with investing with you, they're okay with paying a small fee. And that's why a few people who we helped over the past few months are now making over $10,000 to $30,000 per month, literally in their first few months of starting this business model, even though those people don't have much experience or didn't even know what a fund was. And really, they're doing it from all over the world. We have some from United States, from Europe, from Asia. It doesn't matter where you're from, as long as you have some experience in crypto, knowing if you've been through a bear market and a bull market, that's enough experience, because both markets can teach you a lot. And so with that said, I hope this video gave you some value. If you click the very top link in the description, we have a free training about how to start a crypto fund, because I believe that this is one of the most simplest business models to start in crypto without prior experience to what a fund is. If you enjoyed this video, click the subscribe button, comment below your questions, concerns. I'll be happy to answer them. Thank you for watching, and I'll see you later. See ya.